Hello, Oracles. My goodness, we had some great earnings that came in last week. Nothing that smashed the record book, but it definitely gave us an insight as to where we are moving in the future. Tesla is still on track to achieve their goals 10, 15 years down the road. So today I'm going to present to you guys my price targets through 2033 and how many shares you are going to need to achieve TESLANAIRE along the way based upon my price targets. So we're going to get into that and all of my reasoning behind this. Plus, I will also share when I think the stock will be splitting over the next decade, and we will get into that in just a minute. All right, so before we get into this, I just wanted to preface it all with my reasoning behind some of these things and some of the assumptions that I have made in my valuation model. So, what I have made here is a conservative, mostly vehicle-based valuation model for the price targets going through 2033. There is a little bit of FSD and some software, some energy that is lumped into this, very minimal Optimus and AI. So again, these are very conservative numbers. I like to do it this way because it gives a strong buffer to the upside. So when I put these out, I wouldn't call it my bear case scenario, but it's my very baseline base case scenario if Tesla just achieves basic numbers over the next decade. So that's what I have come up with here. So I'm going to break down some of the information, explain why I came up with it. Please feel free to comment down below with anything that you have for questions. And I have my full valuation model that is available to members and patrons, so you guys can see it over there if you want. And again, these numbers are extremely conservative, and the next 2 years are very questionable just based upon the macro environment. So what ended up happening was my near-term price targets came down, but my long-term price targets went up. So this is what I'm going to present to you guys now, and I'm going to try to get one of these out to you guys at least once every quarter, if not once a month, with all of my updates based upon the new information that we get. All right, so to kick it all off, here we are, 2023. I've got average selling price of 48,000. On the earnings call, the question came out if they thought that the average selling price was going to be 47,000. That's originally what I had. Zach said that they would be coming in above that, so I bumped it up to 48,000. Production, they were alluding to the fact that they have enough to make 2 million vehicles. So I kind of went in between. So production, I've got at 2 million, but deliveries, I put at 1.9 million. Tesla themselves forecast and guided for 1.8 million. But again, I think that they can achieve 2. I put it right in the middle. Vehicle margins, I have at 24%. And I left it there. Now, Zach did say that they will most likely be above 20%. He did not say by how much. So this here with all the EV tax credits that they're going to be getting, regulatory credits they're going to be getting, who knows how much deferred FSD revenue they are going to be recognizing. So I put it at 24%. That kind of seems the consensus number right now. Again, this year alone is, to me, considered to be more near term. So this may fluctuate as we get more numbers over each quarter. So for the end of this year, I have EPS coming in at $4.60, which gives us a price target of $207 by the end of this year, and you would need 4,831 shares to be a TESLANAIRE. And I know one question I am going to get about this year is the fact that, I've got a price target of $207, and we're already at 177, but I also remember last year. Last year, we ran up to start off the year, and then, of course, we came crashing down for the entire year after that. I don't think we are going to be coming crashing down this year. I do think that we are clearly going to be finishing higher than where we began the year, but I think this year is going to be a lot of sideways trading with some massive swings up and down. We just ran 70% in 2 weeks. So that can easily swing down 30, 40% and then swing back up again. We may be seeing these swings all year long. So that's why I left the price target at 207. And again, I played it very conservatively. So for me, I like to be pleasantly surprised. So I have the price target where it's at. And if we come in higher than that, that just left a lot of room for upside. As some people said, this is great for call options because if you think that FSD is going to be getting solved in a certain year, or you think that Tesla is going to be announcing something else massive and energy is going to grow bigger in a certain year, for call options based upon my price targets, not financial advice, could be something that's worthwhile getting into, because mine has the assumptions that these things will get solved, but we don't know when, so I didn't factor them in with a definitive, this is the year it's going to get solved type of thing. Going into 2024, I do think that the average selling price of their vehicles will come up just a little bit. We've already seen the Model Y coming up on their pricing now, so I think they're going to get a better feel for what the pricing could be like at the end of this year. And this is just average. And don't forget, in 2024, we are also going to have the Cybertruck and the Semi out there, so that is going to increase the average selling price as well. Production, I have them coming in at 2.7 million. So that's going to be basically 35% growth year over year. And then deliveries at 2.62 million. Margins, I think, are going to bump up again with the Semi and the Cybertruck. I think this is going to assist margins. Plus, with Project Highland coming out, sounds like they have some major cost-cutting plans coming in for the Model 3 that will help margins as well. EPS for the end of 2024, I have $7.74 with a price target of $348. Shares needed to become a TESLANAIRE, 2,874. Now moving on to 2025, and again, 2025 to me is still going to be that big year that we are going to be getting a massive shift in the entire automotive market. So I've got average selling price at 49,000. Again, this is the Cybertruck continuing to ramp up, and I do think that that selling price is going to affect the average selling price. We've got production at 3.62 million, deliveries at 3.54 million. And if anybody's questioning the discrepancy in the fact that we're going to be delivering less and carrying over inventory, this is not so much the delivery wave that we are working through right now, but just the fact that because of the fact that they are delivering everything that they can produce and they are not trying to rush things out at the end of the quarter going forward, what happens is they have more production at the end of the quarter because they're ramping faster as they go. So in this case here, these are just deliveries that aren't happening within the year, and they're just going to happen to start off the next year. But because of production ramp, there will always be this lagging number, in my opinion. And so with this, margins are going to jump back up to 30%. I think at this point here, we are going to have Project Highland in full effect. Costs of manufacturing are going to come down. Many more Cybertrucks and semis on the road. So this, I think, is going to bump margins right back up. And then with FSD being significantly closer to being solved, if not solved by then, that's going to be a lot of FSD revenue that's going to be coming in, and that will bump up margins as well. So for EPS, I have it $14 with a price target of $630, and you would need 1,588 shares to be a TESLANAIRE. 2026, I see the average selling price now coming down again to 43,000. I think at this point here, we are now going to be having significant amounts of the lower priced vehicle coming out. So while we had the Cybertruck ramping the previous 2 years, at this point here, that whether we call it a Model 2 or compact car, I think that is going to have a major effect on the average selling price of their vehicles. We have production coming in at just under 5 million with 4.88 million vehicles, 4.79 million of those are getting delivered. And now margins are still going to bump up to 32%. You may ask, well, if the average selling price is coming down, why would margins be going up? This is my way of factoring in FSD. We do not know if it's going to be solved. There could be a good assumption that it will be at this point, but between FSD and people adding that on and any other software coming in, it is going to bump margins up. Again, when we look at 2023, we are looking at the fact that Elon and Tesla are focusing on getting out as many vehicles as possible because they know in the future that is going to add on significant margins to the bottom line with further software and FSD revenue coming in. So you drop that average selling price, that means more vehicles getting delivered. That means more software that can get purchased. That means higher margins. That's why I factored that in this way. I've got EPS at the end of 2026 coming in at $18.14, a price target of $816, and you would need 1,226 shares to hit TESLANAIRE. In 2027, I think we just continue moving on that direction. We continue ramping up that compact car, so average selling price is 41,000. Production jumps up to 6.59 million, deliveries of 6.4 million, margins still climbing at 34%. EPS of $26.22, price target of $1,049, and you would need 955 shares. 2028, again, we just continue moving in that direction. Compact car continues to push out more and more with higher volumes. We have $39,000 for an average selling price, 8.9 million vehicles getting produced, 8.64 million getting delivered. 36% margins, EPS of $36.69, price target of $1,468, and you would need 682 shares to achieve TESLANAIRE. 2029, average selling price of $37,000. I think at this point here, we are really pumping out the compact car, and there might even be other smaller vehicles that are coming out as well for Tesla that could be bringing down the average selling price, but selling at higher volumes. So production is going to be 12 million, deliveries of 11.6 million, margins again bumping up a little bit more to 37%, EPS of $48.93, price target of $1,957, and you would need 511 shares. 2030, the average selling price comes down to $35,000. We are producing 15.6 million vehicles, delivering 15.1 million, and I know that Tesla's goal is 20 million vehicles, but again, going on the conservative side, I stuck with a little bit less of a number, and we've got margins coming in at 38%, EPS of $62.22, a price target of $21.78, and you would need 460 shares to reach TESLANAIRE. 2031, average selling price comes down to $33,000. We get close to that 20 million vehicles getting produced at 19.5 million. 18.9 million of those vehicles are delivered. We have margins of 39%, pushing close to that 40%, which is what Elon had said that they should be able to achieve. We have EPS of $75.25, a price target of $2,634, and you'd need 380 shares. 2032, average selling price comes down to $31,000. Production is now over that 20 million at 22.4 million, deliveries of 21.8 million. Margins now hit that 40% mark. Again, with all the vehicles that they have on the road and all of the software that they have and can have available for people in those vehicles, margins are going to be significantly higher based upon their software revenue. EPS is going to be coming in at $83.22. Price target of $2,912, and you'd need 344 shares. And finally, in 2033, I have the average selling price of $29,000. Again, lots of smaller vehicles that are going to be on the road. They are now selling to the masses, and we are having production of 25.8 million, deliveries of 25 million, margins at 40%, EPS $88.89, price target of $3,111, and you would need 322 shares to achieve TESLANAIRE. So for me, I took a look at things because, again, I'm just a little guy, and many of you are enjoying these prices being as low as they are because we didn't have that opportunity to accumulate shares back prior to 2018, and we want to be able to get as many as we can now. So these great opportunities give us that chance to buy more shares. Now, to get us to TESLANAIRE, we're going to need to accumulate a lot. So for myself, I put together a little stepping stones chart to kind of give me that encouragement along the way. So to hit $100,000 in Tesla stock, I would need to hit 287 shares, and based upon my current additions, that would be around mid-2024. For $250,000, I should achieve that by mid-2025 with 400 shares. For $500,000, I would hit that around mid-26 with 612 shares. And then to hit that TESLANAIRE status for myself as of right now, it looks like it would be early 2028, and I would need 900 shares at that point to achieve TESLANAIRE for myself. And now a lot of other factors do play into this for me, just because, I'm really focusing on having income. And then I looked at the number of shares. Obviously, as the share price goes up, it's going to be hard to accumulate more. So that's why I want to focus accumulating as many as I can during this year, because that's what's really going to affect those numbers long term. Because for me, if I keep my income steady, which I definitely do not plan on keeping it steady, I plan on increasing it, but can I increase it fast enough to be able to keep up with the share price growing to continue growing my share count as fast as I am right now? Again, this is why for me, I show excitement during these times when the stock price has pulled down, because I don't have that opportunity to add more if the stock price goes back up. So when you guys see me getting excited for the stock price coming down, this whole entire video here explains exactly why I am excited when the stock price goes down, because I do see it coming back up, and this price coming down gives me a chance to get as many shares as I can. And so over the course of the decade, based upon all of the stock prices that I see, when we look at when Tesla does the splits and when they have announced it in the past, it's when they get close to that $1,000 mark, they want to bring the stock price down to make it more affordable for retail investors and their employees. So based upon all of the numbers that we have and the fact that the timing with their new factories coming up leads me to these guidelines for the splits. So I've got a split prediction coming in 2025 to 2026. That's right around that time. I think we're going to get back to that $1,000 mark. Also, at that time, we are going to be having most likely at least 2, if not 3 new factories up and ramping. And at that point, they're going to have a lot of new employees who are going to want to take advantage of the employee stock purchase plan. Next split after that, I think we're going to be at 2029 to 2030. I think at that point there, we've got FSD is solved, robo-taxis are all over the road, energy has taken off, might actually be bigger than vehicles at that point. And based upon my price targets, not having a huge chunk of energy in here, we may split well before then. But based upon just the vehicles alone, I think 2029 to 2030 will be that next split. And then I think we will see another one in 2032 to 2033, because at that point, energy is really taken off. And we may be getting some insights into AI and Optimus and how those are really going to revolutionize the entire world. And I think that's when we're going to see a next huge run, similar to what we had seen back during the COVID run. And we got that run right up and split. And then the other thing to pay attention to along the way is the macro environment. When we look at the macro environment, we look at the cycles that we go through on a 10-year basis. So usually around every 10 years, we get into a scenario where we get this big bear market, whatever it is, for whatever reason pulls us back. We had the dot-com bubble, we had the housing market crash, we've now got the COVID crash and kind of like the COVID hangover crash that we're going through now because of interest rates going up. So I have no doubt that in another 10 years, roughly, we will be getting into another scenario like this. So right around that 2032 to 2033 timeframe, we may be getting another one of these situations going on. So again, these price targets do not take into account really what's going on in the macro environment. So, and again, long term, a lot can happen over the next 10 years. So this is just a rough guide, but I think right around that time frame, we may be getting into another scenario where we kind of get some, difficult economic times, and who knows what's going to happen at that point. Obviously, I will be updating these regularly along the way. The one thing that you need to do as an investor is be agile. It's good to have a price target that you see going forward, and you can kind of base long-term investments off of that. But you also have to be realistic that things can change. We saw that happen last year. Anything can happen, and we can have something that drastically pulls this rug out from underneath us. We do have to remember in the time that could be just near term only. So lots of different factors that go into this, but these are all of my price targets through 2033 as of right now. Like I said, I will be doing an update on these at least at every quarter after we get earnings. I may try to do it every single month for you guys. Let me know if you would like it on a monthly basis or if you want it on a quarterly basis. But for all members and patrons, I do update price targets and my valuation model on a weekly basis, so you guys can all see it there as usual. So overall, even with these conservative numbers, I am extremely happy with the progress this stock could take over the next decade. You guys can let me know your price targets in the comments below for the next year or next 10 years. Thank you all so much for watching. I appreciate all of your support. Don't forget to hit that like and subscribe button, and we will see you in the next one.